Okay, welcome to the Swing Trading with Cycles channel. It is November 19th, it's Saturday, so we've got a full week of action. This is the week right before, I should say, we just concluded the week right before Thanksgiving week. And so we are going to review the dollar index today, and we're going to do that. We'll look at what things are looking like, as of Friday's close, etc. But we're really going to think about the big picture here. I mean, we generally always do that on this channel, but I think we're gonna go even bigger this time, if you will. And more equally important, we're gonna look at the 10-year yield. So that's the U.S. 10-year Treasury yield. So that's here on the right, the 10-year Treasury yield. And this is important because this thing is correlated with all kinds of things, right? The prime rate, mortgage rates, car loan rates, everything you can kind of think of, right? And on the left, you have the Dixie. These are our famous annual charts, right? Or yearly charts, right? Every single candle here is an entire year of price action. And the first thing that should kind of draw your eye is that we have a major swing high for both of these charts. Hopefully, you've seen enough videos on this channel that it's starting to make sense to you. And if you don't know what a swing high is, definitely take a look at the link in the description. You should also see something on the upper right hand corner coming up right now that should you can go to that video right now. Incredibly important to be able to spot that. It's the most important pattern in markets, because that's what tells you you're topping out, which is to say you're beginning a downtrend. Really important to know about that. And this is an annual, these are yearly charts, which means, again, every single candle is an entire year of price action. So if you have a swing high on an annual chart, on a yearly chart, that's a really, really big signal. And that's important. As I explained in that video, swing highs happen on lower time frames all the time. You go to a little 1 minute chart, you're going to see swing highs happening galore. They just end up failing, for instance, if it's in an uptrend. But when you start, they are less and less frequent on the highest of time frames. So for the dollar, you have this big old swing high in 1985, right? So this is a candle for 1985. And incidentally, this is also a bearish outside candle, because notice it makes a higher high relative to the previous candle. So that's 1984. So it goes up here. So another way to understand this, and I'll actually just zoom in here, right? Just make sure that we're all looking at the same thing. So 1985 was our big year. Notice since that year, the dollar has been going lower. That's the trend, right? And you can see at one point this candle was bright green. How do we know that? Not because we were there watching it trade, but because we know as a red candle, it opened here and it closed here, right? If it opened here and it closed here, but you have this wick here, it means at one point price had traded up to this level. To be more specific, and you can always see the candle details here when I hover over a candle. This candle opened at 152. It closed at 123. So a pretty big move lower from open to close. So from here to here, something more than 20% in that year. But the high was 164. So we opened at 152, but at some point price traded up 12 points, right? Only to come crashing back down to 123. That's important to know about, because that's not just, you're not just making a new low, you're also making a new high, which means you faked a lot of people out, which means this move lower can become even more violent. And then you had 2 years of big follow through. I mean, look at these candles, right? We make another low below 1985 and 1986. And then in 1987, we make another big low below 1986. I mean, this is massive downside, right? What is a similar kind of reckoning moment for U.S. Treasuries, right? 10-year note specifically. That happened so the top came on 1981, and we got our reversal in 1982. So for the dollar, everything happened that 1 year. You had that fake out move higher, and then you dropped dramatically. For the 10-year Treasury, first of all, this is not 1985. This is earlier. So that's important the yield topped out before the dollar kind of had its parabolic peak. That's an important little clue that we'll want to watch, right? So in 1981, the 10-year treasury spikes to 15.84%. I mean, imagine that. We're down here crying about being just under 4%. It spiked at 15. And think about, again, this is correlated with a lot of things. And that's why the idea of a 10% mortgage, in the 1980s isn't crazy, right? Because you peaked out at 15.8% on the thing that's supposed to be the benchmark. This thing's your benchmark, essentially, the 10-year treasury, like the yield. And so we made that high at 15.84, and then the following year we opened way below that high because we pulled back. We know that upper wick is a pullback on a lower time frame, and then we made a low below the low for the year in 1980. Again, that's where the swing high is, right? So the low for that year was 12%. The high was 15.84, I should say. That's 1981. And so the following year, 1982, once we crossed below that 12% level, which was the low from 1981, that was your signal that we have a swing high in place, right? And then we even bounced and made a lower high along the way. That was in 1984. So this is when the dollar kind of collapsed. So that's important, right? Because that almost gives us a little clue. Does that suggest that we should expect that the 10-year treasury tops out before the dollar does? I mean, now, this was a really big topping pattern, obviously. And in this case, notice we've been going nothing but lower since. Now, we've been bouncing, making lower highs along the way. But, I mean, it's been just pretty much nothing but downside. But in terms of correlation, it tells you we may not see the two peak at the same time, but it'll be interesting to watch how they kind of correlate. And if we add the drawings back on here, you can see these percentage declines for the Dixie. So from that crazy parabolic top in 1985, we actually crashed, something. Oh, that's not an increase. Oh, right. This is actually looking at the rise in the cycle. So the rise into that parabolic top was 101%. The next rise was about 54%. And so far, this rise has been about 61. So this is actually kind of looking at the biggest, and I'll get rid of this so you can see that more easily. This is trying to look at the biggest pattern possible, right? Like, this is a clear major low, and then we rally for 7 years, and then we decline for about 7 years. This whole thing is 14 years. Like this is a 14-year cycle, you could say, right? And then this is a major low. We rally for 9 years, and then we drop into a year 16 low. If that were the case, that would mean that we are in year 14 now, which is interesting because these two topped out really early. Now that's obviously a really small sample size, which is what you get when you try to look at the the grandest kind of cycles. But that's just interesting. I'd say that that's actually pretty speculative. If anything, better to follow the 3-year cycle, which we've talked about, and we'll zero in on that as well. But the other thing that I want to bring up here is because of this upper wick, we are guaranteed to have an inside candle as an open for as the opening for 2023, right? We know that. You can almost call it like the secret life of wicks, right? If you have a wick, you are increasing the chance that the next candle is going to open as an inside candle. And as a reminder, an inside candle is just a candle that doesn't make a new high or a new low compared to the previous candle. And I'm saying this is how it's going to open. Doesn't mean it has to close that way, right? It's just good to know how it's going to open so you get a sense of the setup. Because that's not a great setup. I mean, this is a yearly candle, so there's obviously a lot of price action within it. But important to know where you are in the higher time frames, right? Like, this is not an inside candle, for instance, right? This is a trending candle. We're making a new low. That's not an inside candle, also a trending candle. In the same way that these are trending candles. Each of them makes a higher high above the previous candle, so you're trending higher. So when you get an inside candle, that's just consolidation. It's directionless. Not the best thing in the world. And so that's going to be important to watch. Like, where this closes will dictate more or less where this, inside candle opens. Like, how close to the upper end of the range does it open, right? because at this point it's all about this range from like, you know, around almost 115 down to like 95 within this candle. So you can imagine the 2023 candle just kind of bouncing around in here until it breaks above that or breaks below that, or maybe it doesn't do either and it just kind of consolidates, and then we get our next leg up or you know, the next leg down kind of in earnest. So that's going to be an important thing that we're going to watch for. The 10-year yield doesn't have as dramatic a wick, but it is a wick, and so we are going to open as an inside year, probably. I mean, we still have a little time to close, obviously, the year. Like, something could happen. But, like, if anything did happen, it would be pushing us closer to the upper end of the range. If not, it'll be a pullback, and so we'll just open more and more kind of inside, which, again, then creates a situation where you're just an inside candle inside the range, right? And then, but that gives you very clear levels. And of course, we'll zoom in and just kind of look at, you know, look at lower time frames to get more of a signal. And just the note here is really important. After this like crazy downtrend, like this big year of 2022 took out all of this price action and all of this price action. I mean, that's like 14 years just kind of wiped away. That's important to know about. But it also means it wouldn't be crazy to see some consolidation, right? Like, and that's what we're getting here at the very least with this pullback. That said, this just puts us in a really interesting spot because either this is just another lower high, like along with all of these. I mean, I'll just draw these arrows just so that it's pretty clear. That's a lower, well, that's a lower high, that's a lower high, that's a lower high, lower high, lower high, lower high, lower high. So it's like, is that going to be another lower high? Now notice though, this high is higher than these, right? So it is literally a higher high. It's a lower high compared to all of these, right? But it's a higher high compared to this, which is like what, like the bullish scenario, right, would be that we're going to do something like this, right? Right, like reverse symmetry. It won't go up in a straight line, and we're talking, you know, this would be over the course of many years. But you thinking macro, there's no way we could sustain rates this high for the level of debt that we have. So it does make you think. It's like, how much higher can we really go before we start to consolidate? Like at the very least, consolidate, right? So maybe we don't collapse back to like the 1% range, but we at least, I mean, notice the range of this candle, right? You know, from like 1.5% to 4.3. We could range around here for many years, if you think about it, right? Now, if we drop to the lower end of the range, that would obviously be a massive move lower, and that would mean a lot of things for a lot of assets, like probably would be good for risk assets, for instance. I mean, a really, really violent move probably wouldn't be, but this gives you a sense that we could kind of like, this might be setting the table for like, okay, maybe we've capped it out for a few years, potentially, right? And if we kind of zoom into like, let's say a quarterly chart, you can see this candle, like just if we go down to the quarterly level, is a lot of upper wick, right? So like we talked about how there's just a little bit of upper wick on the yearly candle, but this quarterly candle clearly means that, you know, Q1 of 2023 is going to be just kind of very, very well inside the, you know, Q3 of 2022, right? Like, trying to get this thing to move. That's annoying. But you get the picture. I mean, this wick here creates a lot of surface area for this candle. Well, I mean, it'll be smaller. Like, you know, something like that, right? Like, depending on, and if we continue to pull back, like the real doomsday scenario, what we'd really, like, if we are making a sort of, you know, longer term cycle top, what we probably see is that the quarterly candle goes red, right? And so it's important to understand the quarterly candle opened at 3.7%. And we're here at 3.8%. That's not that far a move, right? To get us down to below where we opened the quarter, which again means we would go red, right? We would go from green to red, which is the direction that we're going here with this big pullback. And so that would be important. You can see all these topping candles. Obviously, they're not all red, but the point is that would signal that like this little move, right? I mean, you can even see this was a nice little higher low. This was a fully red quarter. We made a lower low, then kind of rebounded. So you can almost even kind of think of this as like your quote unquote half cycle low within this longer term cycle. It may be that we've peaked here, right? And if I zoom into the monthly, also important just to note that we've been rising for like 32 months now, right? Like that's a really long rise. And so again, nothing can go up in a straight line. And so it wouldn't be crazy. Again, it doesn't mean it has to collapse, but there's enough range that we can just kind of bounce around, let's say even in the mid to low 3% range. And we don't have to plunge to like the 1.5 area, which is down here, right? As we can see, those are the lines that were drawn on the yearly chart. So if this has topped, and it also looks like the dollar may have topped potentially, right? Like as we see the progression of both of these assets, I think it'll give us clues about the other, because as we see from the bigger picture chart, they topped within years of each other. It doesn't mean they have to top within years of each other this time, but it does tell you that that's possible. And it tells you that, this thing is such a benchmark that if this thing is topped, that's going to be an important signal for a lot of assets. Again, probably good for risk assets. And so we're going to be watching it closely. And again, just to zoom in, the monthly chart, also an inside month, also a lot of wick. And so December is going to open as an inside month of October. And we'll have very clear levels. And obviously we have a lot to trade in November still, like 7 or 8 trading days. So we could fall below this low before we even get there in December. But it will set up a situation where we'll have very clear levels. We'll have an inside candle on a monthly. And if we break below it, that tells us we're probably going to test like maybe break down below 3% even. So there's going to be a lot for us to watch. And we'll definitely be documenting it all here on this channel. These assets are really, really important. Just looking at the micro level really quickly though. So the Dixie looks like we have an important swing low on day 12. At this point, you would expect we probably cross above the 10-period moving average, which is also itself moving lower. The real level, the bullish bear line, is 108.468. If we cross above that, then that's a potential trend change. Otherwise, this is just consolidation on the lower end of the range is what you want to be looking for. And on the weekly level, like we're set up for a potential weekly swing low, right? If we can make a move above 107.274, but we're still well in the lower end of the range of this. You can see this big bearish candle. And so it gets a little nuanced where we can make a weekly swing low, but it's still not super bullish. And so we're going to want to watch for that. Just kind of understand that like this decline right here is kind of playing out in a complex fashion. And so we shouldn't get duped by like a weekly swing low, especially if it continues to be bearish. Now, if we see some kind of huge candle, right, like, something like some kind of massive thing that like, this, then that's a different story, right? Like something like that. But barring that, you see some kind of small little weekly candle here, makes a higher high. That's setting up for a potential, reversal that, one could load up on puts once we see a swing high on an hourly chart. And for TNX, the weekly cycle looks like it is topped, right? And so that's what we're going to want to watch. How does the weekly cycle decline unfold? So it topped out on week 11. We're here on week 15. And what does that mean? And we're thinking we probably get a low maybe week of December 19th. And how does this decline play out? Because if it continues to be, the more intense this decline is, the more likely we're having, a bigger top is essentially. So that's what we're going to want to watch for.